This call only collects $36. That's okay. You have to accept the fact that not every single week you're going to be able to generate the maximum income. Sometimes when the stock declines, you're just going to get less premium. In this particular case, I'm only going to generate $36 worth of premium. So this week, I'm only going to generate 0.17% yield on my strategy. Now, if you annualize that out, that's not a bad result. And you'll see over the long run, this actually looks quite attractive. But, as you can see, if I sold the 429 call on November 3rd, go out 1 week, the stock is now trading at 430. What that means is that my cover call has now been assigned, and basically I've sold my stock at 429, and now the following week I go back to selling puts. So I go out another week, I go out to November 10th expiration, and now I go back to finding the same 30 delta put option, which at that case was $426, and I'm going to sell that put for $171, and I'm going back to selling my premium. Now, if I keep doing this over and over again, that's really kind of the strategy, and that's kind of what this shows you, right? What I showed you was the first, I think it was the first 6 or 7 rows here. For this strategy, just to walk you through the mechanics of we keep selling puts until we get assigned, and then we start selling cover calls at the original strike price that we were assigned, and we keep doing that until the stock gets called away, and that basically means that we raise the cash again, and we go back to selling naked puts, and we keep doing this over and over again. So this is basically looking at this trade starting from the end of Q3 all the way through the last week. So the last trade that we make was on was the one that expires this Friday for the 509 puts. When the stock was trading at 514, we collected $227. This is still open, and basically at the end of this week, we'll see if SPY is going to be above 509. If it is, then those puts expire worthless, and we keep doing it again next week. If it's below 509, that means we'll own SPY at 509 and we'll flip to selling cover calls. Okay. Now, even though I went through a lot of numbers, hopefully you still understand that the strategy is quite simple to get started. It's simple in terms of nature, meaning there's only 2 possibilities that you need to think about at the beginning of every single week. And you can do this every single week on cover calls, on short puts or cover calls, and you do it only once a week because you hold it to expiration. There's nothing that you have to do in the middle of the week in order to trade this type of strategy.